What if I told you 100% of publicly traded companies use the accrual basis of accounting? Now what if I told you many small businesses use the cash basis of accounting? So what is the difference? I'm going to explain the difference between the cash basis and the accrual basis, why each one is used, and who they're right for. I'm even going to take you through an example of each. If you haven't already watched my full videos on the cash basis and the accrual basis, I'll leave links down in the description below where I go a bit more in depth into each individually. Okay, so let's take a look at the cash basis. All right, let's kick it off with a quick recap on the cash basis of accounting. But there's one more thing. If you could hit that subscribe button down below, you'd be doing me a great favor for this channel. So the cash basis of accounting is a method where revenues and expenses are recognized when cash is paid out. It's a simpler system compared to the accrual basis, as it only considers cash transactions. This means that income is recorded when it's actually received, regardless of when it was earned, and expenses are recorded when they're actually paid, regardless of when they are incurred. This method provides a clear and immediate picture of a company's cash flow, making it easy to track the actual amount of money coming in or going out. However, it might not provide an accurate representation of a company's overall financial health. It doesn't take into account non-cash transactions and future obligations. So now let's move on to a quick recap of the accrual basis of accounting. So the accrual basis of accounting is a method that recognizes revenues and expenses when they are incurred, regardless if the cash is actually received or paid. This means that revenues are recorded when they are earned, not necessarily when the cash payments are received, and expenses are recorded when they are incurred, not necessarily when the payment is made. The accrual basis provides a much more accurate picture of a company's financial position and performance by matching revenues and expenses to the period in which they occur. It helps provide a much more comprehensive and realistic view of a company's activities, especially for businesses that extend credit to customers or receive credit from suppliers. This allows for a much more accurate representation of the business's financial health and performance over time. All right, we're on to the pros and cons of the cash basis of accounting. Do me a favor, if you haven't already hit that like button, please do so down below. And with that, let's get into it. So there's 2 pros and 2 key cons that I want to cover for the cash basis of accounting. The first one I want to highlight is simplicity. So the cash basis transactions are only recorded when cash is received or paid, making it easier to understand and follow than the accrual basis. Additionally, this method can be beneficial for individuals or businesses that have a simple and straightforward financial situation. Another advantage is the immediate recognition of cash flow. Since cash is the primary focus, the cash basis allows for a much more accurate representation of cash flow in the short term. However, there are a couple of drawbacks with the cash basis. So I mentioned there's 2 that I want to touch on. The first one is it doesn't provide an accurate picture of the company's financial health because it only records transactions when cash is involved. It may not reflect the true profitability or overall performance of a business. Additionally, the cash basis can be misleading when it comes to larger expenses or investments that are paid over time. Therefore, the cash basis, it's not suitable for companies that need a more comprehensive and accurate financial overview. Now, just like I touched on pros and cons for the cash basis, I'm going to do the same with the accrual basis. So on the positive side, it provides a much more comprehensive and realistic picture of a company's financial health because it records revenues and expenses when they're earned or incurred, irrespective of actual cash flow. So this method, it provides consistency and comparability, making it easier to assess a business's performance over time or compare it with other companies. Accrual accounting also meets the matching principle, linking revenues with expenses in the same period, which enables accurate profit measurement. However, it can be more complex and challenging to implement than cash-based accounting, requiring extensive record keeping and understanding of accounting principles. It can also distort the total available cash picture as revenues are recognized before cash is actually received. Now, this could potentially impact short-term liquidity and lead to cash flow management problems, especially for those smaller businesses and startups. All right, I touched on the pros and the cons of the cash basis and the accrual basis, but I want to make it explicitly clear who should use the cash basis. So the cash basis, it's suited for small businesses, freelancers, and sole proprietors who primarily deal with immediate cash transactions. So by recording these revenues and expenses when the cash actually changes hands, these entities can more easily manage their cash flow and understand their immediate financial situation. It goes back to the simplicity of the cash basis, and it makes it ideal for these businesses with limited resources or the ones that may not require detailed financial reports. This method, some of the other benefits, it tends to be less time consuming and a bit cheaper to maintain than accrual accounting. So it makes it more attractive for those small sized businesses. In addition, nonprofits also use the cash basis to keep track of donations and expenses. It's essential though to note businesses with more complex operations, such as those with inventory or credit sales, might find the accrual basis of accounting more appropriate. If you've been paying attention, you know that we're now going to make it explicitly clear who should use the accrual basis of accounting. So it's suitable for those businesses that have significant sales on credit, deal with inventory, and companies which provide services that may not be billed for or paid in the same month that they were rendered. Now, this method allows businesses to accurately track their income and expenses in the time period in which they occurred. This promotes a more detailed overview of the company's financial situation. It's best for corporations and partnerships, pretty much any business that is publicly traded or has investors, as it's generally required by law for these entities. So companies wishing to get loans, apply for grants, or seek investors may also need to use the accrual basis as well. Large nonprofits, government agencies often prefer this method as well because of that clear financial picture. The accrual basis of accounting is well suited for a wide range of business structures. It's encouraged by GAAP and IFRS. Now, I promised you an example of the cash basis of accounting. I want you to imagine you're a small business owner that provides a service in January, but you don't send the invoice until February, and payment doesn't come in until March. Now, under the cash basis of accounting, your transaction would not even be recorded all the way until March, when the cash is actually received. Now, likewise, you're the same business owner, you incur expenses in March, but you don't pay for them in April. Now, under the cash basis, they'll be recorded in April. Now, you're gonna see this method is pretty straightforward, and that's why it's used by small businesses. Back to that simplicity. However, it may not give an accurate representation of the business financial health at that given moment because it doesn't consider accounts receivables or payables, only when the actual cash exchange takes place. Despite these limitations, the cash basis of accounting is still extremely popular. All right, so let's do an example of accrual-based accounting. But I do want to point out accrual-based accounting is recognized and advocated for by generally accepted accounting principles, GAAP. You're going to hear that a lot when you're learning accounting. Now, this approach, it records transactions when they're incurred rather than when the cash changes hands. That allows for the more accurate picture of a company's financial health. So an example of accrual-based accounting would be the consideration for rent. Let's suppose a company pays annual rent of $24,000 in January at the start of the year. This transaction, it doesn't display accurate monthly expenses as the company only pays it once per year. So under the accrual basis of accounting, the transaction would actually be spread out and recognized as a monthly expense of $2,000 despite the cash being paid at a lump sum at the beginning of the year. So this method, it advocates that revenues and expenses must align with each other, thus presenting a more balanced financial statement. So that brings us to which basis of accounting should you use. Deciding between cash and accrual basis of accounting largely depends on the nature and the size of your business. If you're running a small business with straightforward transactions, then the cash basis might be more suitable because it's simple and it provides a clear indication of your cash flow. Conversely, if you're running a larger business and it has more complex transactions, such as credit sales and purchases, the accrual basis might be appropriate. So accrual accounting, it gives a more accurate picture of a company's profitability as it records revenues and expenses when they're earned, regardless of when the money changes hands. However, it can complicate the understanding of your cash flow. Now, if you need more help narrowing it down, then be sure to chat an accountant. If you want to know more on GAAP and IFRS, since they both encourage the accrual basis of accounting, then be sure to check out my other videos. I'll see you in the next one.